The stock market has been an absolute roller coaster so far this year. Tech giants completely staying high and smashing earnings, AI becoming more dominant within the field and changing the overall game. Today, we're pulling back the portfolio again. We're doing another stock market update. We're going to be having a look at every ETF, every stock that I'm currently invested in and looking at for the foreseeable. We're going to be talking about Microsoft, Google, Alibaba, the overall market as a whole, and even a bonus stock at the end. So make sure you stay tuned for that. So let's see what is working currently for me and what isn't so far. We'll also be making some live investments at the end of the video. So make sure you stay tuned to see what exactly I'll be investing in for this month. Let's get into the video. Now, recapping the broader market for a second, interest rates are still high, specifically within the US. Now, the Fed hasn't cut rates just yet, although they're forecasted to probably do so. Obviously, a rate cut will be positive for the stock market long term, but although interest rates have been fairly high, the stock market hasn't really caught up to that because we're still seeing all-time highs when we're looking at the trend of the current market. So there is still bullish sentiment there. However, when we flip the script and we look at the UK, we did have a small interest rate cut, and this is mainly because the UK economy's just been dead. It's just been very, very sluggish of what analysts have been saying. So there was a rate cut to try and stimulate some growth. We're also seeing analysts saying that more rate cuts are to be forecasted, similar to what's happening in the US. So that will likely happen at the back end of this year. Now, unless you've been living under a rock or you just haven't been in tune with the overall market so far, the S&P 500 is doing very well so far. Currently in August, we are still seeing that upward momentum, with the market closing in off of its all-time highs, which will likely break with even if we look for forecasts for this year. The index is up 8.8% so far year to date, and if I'm honest, it's not really showing any slowdown, especially if we get those rate cuts. There's no reason why we can't see double-digit growth figures this year. Technology stocks are obviously leading the way, especially with that AI component coming into play. This is why we're seeing so much optimism, in my opinion, within the market. Now let's break these down into three separate segments, starting off with market drivers. These overall gains are supported by tariff concerns weakening as the 90-day period is slowly coming up to an end, and Trump is obviously looking a bit more bearish on his overall tariff concerns. So he is going back a little bit in terms of the crazy tariffs that he did impose on countries like China. He has slashed those tariffs more or less in half, so to speak. Strong earnings are again supported by the tech sector, and different industries such as semiconductors are really growing into this space, obviously with the adoption of AI. And like we already touched on, with interest rates looking to be potentially cut, this can only bolster stocks, in my opinion. Secondly, sector performance. Large tech companies such as your Teslas, Nvidias, even companies like Apple, Meta, Google have all posted some pretty strong earnings in early August, further solidifying this overall bull market theme. Next, we have the overall broader economic piece to it and the policies that the US are imposing. Companies are now taking a transition and investing more domestically, and what I mean by that is companies like Apple are transitioning their manufacturing pieces, not the whole thing, but pieces, onto US soil. This then hedges off that tariff concern and eases a little bit of anxiety for the long-term investors and institutions. And while Trump is still trying to work his magic, he is still trying to get rates cut. That is his big push, and he's very, very prominent on that, and he's very bearish again on Jerome Powell, the current gov sitting in the Fed. So yeah, he'll likely get that by the end of the year, although Jerome Powell hasn't cut rates during the last cycle. Now, the first stock that we're going to be covering, which you'll see on screen here, is Alibaba. Now, Alibaba is one of those stocks that you either love it or you kind of hate it. Why? Because there is risk attached to that, mainly political risk, because this company is domiciled within China. So there's that component which is very important to consider. However, for my reasons, mainly investing in this stock, which again, if you haven't already and you wanted that full explanation, I've got a previous video that I go into much more detail. But this company is severely undervalued. When you're looking at the valuation metrics, when you're looking at the PE ratios, etc., you can see, comparing it to their counterparts in the market, this company is trading at fantastic valuations. Now, not only that, the company are doing share buybacks, which means they're showing confidence within their stock. They're purchasing their own shares, which to me is a good sign. I'd rather companies do this than issue dividends, so to speak. Although dividends are fantastic, where I'm at in my specific journey, I'm focused on growth. So share buybacks are a big positive for me personally, and they have so much free cash flow as well, which allows them to go in, research and development, go into spaces like AI, and obviously purchase back shares, which is great. Now with this stock, we've seen some impulses already to the upside, which is great, and this is mainly due to the truce between the US and China. So that has obviously seen some optimism within this stock specifically. Even when we're looking at AI and their cloud side of the business, to me that's again another positive. It kind of aligns with what I have already invested in when you're looking at Amazon, Google and Microsoft, which we'll touch on in a minute, but they do have a component of cloud within their models. So for me, it's great to see this. And even when I touched on the fact they're repurchasing shares, they repurchased $56 million worth of shares from their previous quarter, which again is insane when you think about it. Now, even looking at analyst opinions, if they matter at all, right, because they get stuff wrong all the time, but it's a good thermometer to have a look at. And there is a lot of bulls in the market when looking at Alibaba. People have their price targets around $144, $165, even up to the $190 range. I think my average price is around $90, so definitely got in a decent price there. So for me, it's definitely one that I'm holding on. Anything can happen with this stock. Like I said, there is still that risks there, but no risk, no reward, as they say. But again, everything I've done my research, so very, very happy with the stock here, and I'm up 20%, which is obviously great. As touched on earlier, the other three giants that we are involved in individually are Google, Microsoft and Amazon. Amazon is a company that I've recently added to my portfolio. When we saw that huge correction in the market, I got it at a great price in my opinion. Again, Amazon is a fantastic service. Even you guys watching this now, you probably used Amazon yesterday or sometime this week, which is pretty insane. But I didn't buy it necessarily because of their e-commerce play. It's mainly because of their movements within AI and their solid moat dominating the cloud space at the moment as well, which is a very, very profitable side to their business. Similar to Google and Microsoft, they do have that cloud component to them, but my reasons for investing in those guys are slightly different. Again, still with that component of AI, but even if you're looking at a company like Google, they have such a dominance on search, fantastic advertising side to their company, and YouTube as well, which again is a Goliath for them. So three amazing companies that I've got here, definitely ones that I'm holding for the long term, and I just don't have any reason to sell these companies. There's no real logical reason. They've got solid moats around them. You're not really going to see Microsoft fall off the face of the earth anytime soon, so why in my opinion these stocks will continue to rally. Again, they'll have pullbacks, it's pretty normal, but in the long term we're going to see high highs and higher lows. Now, the bonus stock that I want to share with you guys might be a stock you already know, but again, it's a company called AMD. Now, AMD, if you don't already know, they essentially design and sell high-end performance semiconductors and performance products such as CPUs and GPUs, similarly to Nvidia in that kind of domain and the AI niche. Now, AMD targets multiple different sectors such as data centers, PCs, gaming, even advanced systems and AI models as well. Now, AMD is investing heavily within innovation and research and development, particularly when we're seeing their collaboration with Microsoft, the stock that I'm already involved in. Now, this collaboration through Microsoft's gaming arm Sony will allow them to strengthen their overall ecosystem and presence within that space. Their revenue growth again is predominantly driven by the CPUs and the GPUs, and now AI, as we're seeing more and more need for that infrastructure. You could kind of picture this as their moat. There's not too many companies out there that's doing this, specifically within tailored niches as well. Now this is where AMD kind of steps in, and as we're seeing more demand for cloud, etc., we're going to need data centers to store that information, and that's where AMD comes on. And as long as they're doing, you know, innovating and collaborating with big players, there will always be a need for another company like AMD. Now this is a growth stock and the PE ratio is over 100, so we're seeing that it is trading at crazy valuations. However, like we've seen with Nvidia, these stocks can just keep going higher, making higher highs. So is PE definitely a good ratio to look at? It's definitely an indication, but in my eyes, I would rather get it at a much discounted price just to save any risk there. And a lot of analysts do rate this as an overall bullish / buy sentiment rating, mainly due to the AI related products and features that AMD is holding at the moment. However, on the flip side, we have bearish views as well, of price targets of even as low as $140. Now, while there is optimism within AMD, investors are still cautious about their valuation concerns, which is fair enough. Also, with the expectations to meet specific figures and their uncertain executions to get really tapped into the data center and the GPU market is always a risk for them. And even if you're looking at macro factors such as China and US tensions, which is still there, this is another risk for AMD. Now, to recap, we are still holding the stocks within the portfolio, haven't sold any positions as of yet, but we are still making investments, guys. And today we are going to be investing into our S&P 500 and our all-world ETF so far. Now, I am not going to be investing in any stocks this month, just because, again, the valuations are still super high and I'd rather get something at a discount rather than fair value. So I've got a bit of spread there just in case of any downturn risk. So yeah, just going to keep it simple for my overall investments for this month, but we are still seeing gains in the S&P 500, so you can't really complain with that. But that is it for the video, guys. If there is any other stock or any other ETF that you'd like me to break down, be sure to let me know down below, and again, drop me a like and a subscribe. See you on the next video.